Good morning. This is Dennis Orban with the Active Trend Traders. Welcome to this Friday's edition of the How to Make Money Trading Stocks webinar. Again, we changed the format for everybody to be aware of, and so we're going to be fast and furious trying to get done within 10 to 15 minutes. Joining us from Zurich, Switzerland is Michael Bishop. Welcome, Michael.
Hello. Nice having me.
And so Michael was just telling me while we were waiting to come on board is that he was surprised. Well, he was surprised by the market's reaction to the French election. So, hey, what can we say? Vive la France, right?
Vive la France.
There you go.
Viva is, I think, Spain.
Okay. So, hey, I want to remind everybody that all the materials we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Let's jump right into it this morning. Here's a little bit about who I am. And the majority of you, unless you're new to the presentation, are aware that I'll leave that up just for a moment. Moving on. This week we're going to go market review, stocks and ETFs setting up and or outcomes from setups that we had over the last couple of weeks. And then what else? I want everybody to remember, and especially if you're a premium active trend trading member, we have covered a lot of things in training over the past few weeks, and I've got some rock solid, basically help strengthen, add reinforcing steel to the foundation that we already had set up with the active trend trading, and we saw some of that come to fruition this past couple of weeks. Okay, here's where we're as of 9 o'clock this morning, and as you can see, all the indexes are up for the year. Active trend trading. This is a combination of profits already taken and also existing open positions. So the last couple of weeks, this has jumped up very nicely up to about 12.79% for the year so far. Very pleased with that. And hopefully if you've been trading along with us, you're very pleased with it also. And so now, Michael, before I get into the S&P, you said you had a credit position on or a volatility trade on over the weekend that you put on last Thursday or Friday in preparation, and I'm assuming those were credit positions where you had taken credit in?
Yeah, so even more, also the last weeks, I gradually increased my credit in option positions, and it worked tremendously well.
Yeah, because you
only I mean, it can always be better. I mean, it was a very, very exceptional situation. So basically, from a medium to relatively high level, it collapsed within 2 days, and so I. With very few exceptions, I took all winners, and now I'm kind of with empty. So I have filled the pocket with some money, which is good, but the game is over, I think now.
Okay. Well, yeah,
it's in volatility right now.
Yeah, basically what happened is when the volatility crunched and fell back from over 15 on the VIX down to, like, I think it dropped down to about 10, all of a sudden those credits that you had sold were basically worthless, and so you sold them high and bought them back at a very low level, and that's the way credit trades could work.
I mean, not worthless, but I mean, what's the point in taking the risk and waiting another month? Most of them were monthlies. If you realized 50% in a couple of days, so yeah.
Yep. Remove your risk from the table. So here's where we're at with the S&P, guys. We had a really nice bounce on the S&P starting about a week ago on the 17th, 18th combination. That gave us a trigger to get into the indexes to the long side. We did do a position. In TQQ. which gave us an average about 6.7% gain on that one position. Now on the S&P rallied and popped up above this downward sloping channel we were talking about for, oh gosh, since the beginning of March. It popped up above that breakaway gap here, another breakaway gap here, and then it ran headlong into the ceiling and is trying to figure out what it's going to do from this point. If I was to just take this on a daily basis on the S&P, these are three very bearish candlesticks. We get a shooting star on Wednesday, a hanging man on Thursday, and now we're getting a full-blown bearish engulfing pattern on Friday. If this continues to be the point, it will be three bearish candles in a row. We have the TSI starting to kind of turn over. However, momentum is continuing to move up. Momentum on the longer term momentum on the market forecast on a daily basis continuing to move up. A couple of other things that are of interest is on the weekly chart. The TSI did in fact tick up on this week's move. So if TSI can break above this, if S&P can break above this 2400 level, then it will be in blue sky. Time to sell SPY calls. Yeah, possibly, David. That's a great question. But well, it'd be nice if it would just work within this area here for a little bit, and then kind of put in a little handle, and then if it breaks the upside, great. If not, that's okay too. Remember that this time of year, typically S&P tends to move a little bit sideways, but getting some positive, like I said, some positive, a little bit of momentum, tick up on the weekly, a little bit of longer-term momentum on the markets. Forecast also ticking up. Depending on how we finish today, well, this wouldn't really be a shooting star, but it is very clear from the weekly chart where the selling started. It started right up there just below the 2400 level, and that's why we have a long wick showing up right there. So that's what we got going with the S&P. On the NASDAQ, NDX, well, I typed it in. Why didn't it take? There we go. NDX. NASDAQ is just the gift that keeps on giving. Basically, we broke out on Monday above this 5450 level, which is a level of support, breakaway gap, and then another smaller breakaway gap on Tuesday, a little bit of pause on Wednesday, powered up on Thursday, and now push higher on Friday. However, we have reached resistance up here at the 5600 level, and it is selling off a little bit. Nothing here that says, hey, get short the NASDAQ, with the Qs or anything like that. And so we'll just keep our eye on, let's get rid of some of this stuff over here. Remove all drawings. Okay, there we go. And so that's what we're looking at on the NASDAQ. What are we seeing here is, talked about this on Wednesday and Thursday. We may be having a classic negative divergence start to set up. We'll see how that works out, but on the weekly chart, as you can see, prices are moving to new high. However, the TSI, the momentum, and even the momentum, longer-term momentum on the market forecast weekly charts are lagging behind price action. Oftentimes, price action can push up to a higher high, and if you put in this lower or negative lower high on the TSI momentum and or the market forecast, that can be indicative that we're getting ready for a turnaround and a stronger pullback. This uptrend is still in effect and continues in effect. You could draw that trend line in there and watch any pullback into it for potential opportunities to get long the NASDAQ via QQQ or TQQ, which is the 3-time leverage index ETF for the NASDAQ. And so, as you can see, NASDAQ continues just to push higher, and nothing's saying, hey, I'm ready to collapse yet. I may be having some clues shape up, but nothing really happening. Russell. Okay, Russell, on the other hand, reminds me of an old country and western song, but I won't sing it for you. Okay, we had a breakout above this year's high, as you can see over here. However, it didn't hold the breakout. And so if I throw in, here's kind of our line of demarcation. I'll go up to these highs, and I'll put one there, and then I'll go down here to these lows made up by the bodies here. To give it an indication of approximately, and I'm using the body because that tends to be a stronger level of support and our stronger level of resistance, which depending on which way you're approaching the price action. As you can see, we popped up to a new high. However, it did not maintain its blue sky condition and is now pulling back into the congestion that we've seen going on for the last, ever since the end of December, or first part of December last year. And I can throw in another one of those right there towards those bottoms. And that kind of gives you an idea of where the Russell may go. Russell also tends to move sideways. And so David asks, is it time to buy some TZA? I think, David, possibly, okay, possibly. Of course, we would want to put a stop just above this high here. And so we'll be looking at some of the opportunities when we get into the final hour, which comes up at 12 noon Pacific time. There are a couple that are just, sitting up and going, let's take a look at these. So that's what we've got going on this. Actually, so we could count that kind of as a bearish harami on a daily chart. When you're doing the indexes, you kind of have to fudge a little bit when you call out the candlestick patterns. And now we're getting a nice little sell-off going on today. This 1400 level really needs to hold or down at the moving averages. We went very quickly from, here's this 18th, which was midsection of last week. I think it was Wednesday or Tuesday. We went from in and at the moving averages to being well extended above the moving averages, and now we're getting a pullback back into the moving averages. And so we'll just keep our eye on that, but both of those candles, as with the NASDAQ, and the S&P, or not, the Russell and the S&P are bearish type candles. And it's clearly defining where sellers did in fact come in. So, okay, Michael, just real quickly, any comments on the indexes?
Well, what's interesting is that we have some divergence, yeah.
Yeah.
So, and only a couple of stocks influence the market big.
Yeah, Mike talked about that last night in the Bay Area Moneymaker meeting, is that there's like 4 or 5 stocks that are influencing the S&P, the NASDAQ, and the Dow, those being Amazon and a lot of other, Amazon, what other, not Netflix, but even Apple has come back into play and all that kind of stuff. So very
then Tesla next week, I think. Facebook will be exciting.
It's going to be an exciting time. So basically, there's where we were with that. Taking a look at the percentage of stocks above the 20-day moving average, it did push up into its highs, but then basically started to flake out on Wednesday with a shooting star, and then it's proceeded. And so this is telling us that the entities like the NYSE, that is a non-weighted index, it has already started, the internals within that has already started to sell off. Now, how hard and far is it going to fall? We don't know. Remember, this year so far we have had 0 full triggers for the early warning alerts. Now, we did issue an early warning alert courtesy by on the 17th and 18th to get into TQQ and came up with a nice little profit on that. But at this time, nothing really to look at here except, you know, we do have the S&P, or the spiders here, went up, retested at its highs, so it's bumped its head against the resistance area and is turning down, and it's appearing as if we're getting a little bit of a sell-off in the other indexes. Here are the stocks that we covered this week and last week. One, WB. WB is doing well. I mean, we got out of the first half of the trade with a 4% gain. We're up over 9% on the second half. We got a TQQ with, on average, a 6.52% gain. Comms, we're still holding on to half that position. We got out with 3.47. FAS, we got out with a 5.74 on the first half, still holding on to the rest of the trade. And then I want to call to your attention that Tesla, which continues to be, you know, in our holdings that we want to trade, has earnings on May 3rd, which I believe is next Wednesday after, what happened? There we go. After the market closes. After the market closes. So if you're trading with us with the strategy number 3 with Tesla, we'll be waiting until Wednesday to open any positions on that when the volatility goes up. Early warning alerts up 5.43% for the year. So the reality of trend trading, I'm always bringing folks back to the reality of trend trading. One, you got to know the trend. You got to define the area of interest or value. Define the triggers and then your strategies going forward. You know, if your mechanical side of your trading isn't working, in other words, you're having issues, you should be able to check your journal, because you're hopefully in your journal you're capturing not only your trades but also what you're thinking, what you're feeling, and all that kind of stuff. But if your mechanical side isn't working, check your mental, physical, and spiritual side. Some people don't like me to go there, but get over it. And remember what Peter Brandt has to say, never chase a signal, never. There will always be another day, another market. If you miss a move, so what? And it's absolutely true. We're going to be doing a presentation in the very near future, and I'll try to make this available to everybody, but the presentation is going to be respecting the rhythm of the market. So here's where we sit. We were able to cash out on several of our Strategy 1 trades. It's up nicely now for the year. Cash on a Strategy 2 trade. We didn't do a lot of Strategy 3s in the month of April. Actually, the first part of April, we got hit a couple of times on our Strategy 3 trades, but still up nicely going into the end of May. So here's where our, and so these gains are inclusive of both the premium that we've collected in Strategy 3 and also the residual value of the straddles that we're working at. We're going to be watching Tesla. Depending on what the reaction is with Tesla going into next week, we may very well push this over 100%, depending on what, and if it goes over 100%, that's total gain. That means we've paid for the underlying position plus made a 100% on top of that. We will close that position out totally and then rebalance. I'm looking at, because the volatility has been so low, Nugget and SPY have not been giving us a lot of opportunities. So, but anyway, for this part, Strategy 3 is up with both held gains and profits already turned over about 43%. So we're quite pleased with that. So I'm going to show you guys, I'm going to take 2 minutes and show you, I'm going to take a minute and show you two trades, or two entities that I'm looking at going into next week that look very positive, and then we're going to call it a day. The first of those is 3 of them, UCO. Again, UCO sitting up at 1778. This is the 2 times leverage ETF of the oil index, And as if you're a active trend trader, you can see the setups happening. You know what's going on here, both from a longer term weekly perspective. Typically it is moving here within a, just to give you an idea, this channel that oil has been moving in for quite some time now is from about here up to, let's say, here. So that's about a 25 to 30% channel. It appears like we're getting a reversal signal. That's one nugget. Now, it's not the richest time to be able to go into the gold miners aspect, because we expect their big move to be in the June-July time frame. However, we are getting a turnaround signal that could lead to longer-term trades, even if it just trades back up to, well, if it trades back up to its past resistance, that's about 14%. If it trades back up to its ultimate past resistance, that would be about 35%. So we're going to be watching that going into next week. And then lastly, LABU. LABU on the weekly chart is looking quite interesting. I'd want to see a pullback into the moving averages before I jump on it from a daily basis, but it's definitely looking interesting. It gave us a good trigger about 2.5 weeks ago on 411. Now we're waiting for the pullback for the second chance entries. So, Michael, that concludes today's presentation.
Okay.
And so for the premium members, stay tuned. We'll be back in about 12 noon. And thanks for joining us, Michael. And here's the sunset I have to look out every day.
That's great. I only see rain if I look out of the window right now. Raindrops keep falling.
Yeah. So, hey guys, if you want to contact me, please shoot me an email if you have any questions or anything like that, and we'll help get you plugged in. But until Monday, when we basically do aftermarket Mondays, that's when we've basically provided you some additional stocks. We did that a couple of weeks ago, and of course, we don't provide the triggers on Mondays, but we do to the premium members. So have a great weekend. God bless everybody, and just go forth and conquer. Thanks, Michael.
Thank you. Bye.